Hey, Steve Saretsky here. As always, this is the Friday recap video where basically every Friday coming to you recapping the Canadian real estate market, Vancouver real estate market focus. If you like these videos, hit thumbs up, subscribe. Obviously, appreciate your support. I want to hear your banter in the description, or sorry, in the comments below. Just sort of, provide your feedback. What are you seeing in the market? What are you thinking? Do you have any questions? Post that in the comments below. Get a dialogue going here. Everything that I talk about basically gonna have charts and graphs, data too, especially the Vancouver real estate market. In some of these blog posts, in the monthly reports, I've put together a lot of stats. I don't think you're gonna get that much in-depth data from anywhere, any other source. I basically sourced it all from the stats from the real estate board. Put those together myself, so check those out. Basically going to talk first off on the Vancouver market. Like I said, it's really two different markets. You have the detached market and you have the condo market, and they're both going in really different directions. So, first off, I'll speak on the detached market. Basically, as another realtor summed up to me the other day, it's a slow drip where most people don't really see what's going on. They don't really know what's happening. Everyone's trying to get an understanding. You had a huge drop off in sales and prices, and then it sort of rebounded the spring. Now it's kind of flatlining. Like what's going on? Where's the detached market? And so I would call it, as the other realtor called it, it's a slow drip, where basically, even though someone's paying $1.5 million today, let's say you buy a house for 1.5, you're getting a better house than what you would have spent 1.5 for a year ago. So I would say buyers aren't necessarily paying less money, but the house that they're buying is they're just getting a better value. You're just getting a nicer house for that price that you're paying. And that's really what's happening in the detached market. I think that it's trending downwards. I think there's pressure on prices. I think you can look at inventory. Inventory's been building up. Sales are doing okay, but that's basically where we're at, right? The capital is tightening up. A lot of the foreign money is tightening up, and it's just putting this pressure on the detached house. Now, I think that obviously you're throwing a stress test on top of that in January. I don't think that's going to help that market, and so I see that I think the detached market is trending down. It's a softer market right now. I'm not going to say that prices are going to drop by any sort of measure. I can't forecast that, but that's what's happening. And then I look at the condo market, which is basically the inverse of that, where this October prices hit an all-time high. Again, they've inched up higher every month. They've hit an all-time high in October. The average price per square foot is $1,045 in Vancouver. Inventory is at a record low. So if you take the inventory levels for each month over the past 10 years, inventory in October was the fewest number of units for sale. And so that's basically what's happening is you have very few inventory. You have a lot of buyers that are desperate to get into the market. They're basically driving up that little bit of inventory. They're competing for that little bit of inventory that's for sale. Prices are getting driven up, and you're going higher each month, and that's basically fueling that self-perpetuating price growth, right? As prices continue to rise, people begin to feel more and more confident. It just creates more of that sort of panic to get in, right? And it's sort of self-fulfilling, where prices just continue to inch higher. A good example of that is Surrey. Now, if you're not from Vancouver, Surrey is basically 30 minutes outside of Vancouver, generally a more affordable, lower income area out in the suburbs. And what's happening is they've been densifying. People are moving there for affordability. It's sort of the next up and coming hot spot. But if you look at condo prices over the last 10 years in Surrey, they were basically flat. There was no price growth. If you'd bought a Surrey condo, you'd probably lost money up until the last 2 years. This year, it's going through its euphoria moment where there's just so much confidence in that market. Buyers are just squeezing away, and it doesn't matter if it's an old 35, 40-year-old building and it's getting multiples. It doesn't matter, as long as it resembles 4 walls and it has kind of a roof over it, it's gonna sell. And so basically in 2017, condo prices have been rising by 3% each month. So 3%, 3%, 3%, 3%. The benchmark is showing, as of right now, a year-over-year increase by 35%. Doesn't really matter what metric you want to use. Condos in Surrey are going up by 3% every single month. So, obviously it's clearly an unsustainable path. But right now, the mentality is that prices can only go one direction, and that direction is up. And so that's what's fueling these condo prices. I can give you an example. Another area just outside of Surrey. And again, this is happening all throughout the Lower Mainland. There's a condo unit came on for sale. One of my buyers wanted to make an offer on it. He goes, what should we make an offer for? So it's listed at like $440,000. Listed at $440,000. The last two comparable sales, identical, just sold this month for $450,000. Now, think again, it's a condo, it's a box in the sky. These units were basically the exact same. Like no different like upgrades or anything like that. They were virtually identical. So two of them this month sold for $450,000. This one was listed for $440,000. So I said, it might go for upwards. It might go for like $460,000. To me, that felt like the high side. Anyways, 9 offers later, it goes for $485,000. So $35,000 over the last comparables. It just sold this in the same month. So what's happening is that, these buyers are obviously it's as if it's as if there's no the money is worthless. Like it's as if you're playing with like house money or monopoly money, and it's just like whatever, just $485,000. And so that basically sets a standard now. So the next seller that's going to come in and say, "Oh, I want $485,000. I'm going to list at $485,000, or I'm going to list at $490,000," and it's just that's what's driving these prices up and up and up and up and up. Again, so obviously 35% price growth on a year-over-year basis is it's clearly unsustainable. So I don't know. I'm not going to make any forecast predictions on what's going to happen with prices, but you just cannot expect that sort of price appreciation every single month. So hopefully buyers come around to that. Hopefully people aren't buying on speculation, which is obviously, Vancouver market's ripe with that right now. Which basically brings me to the Toronto market. It's not my area of expertise per se, but I am watching the data over there. I am consistently having some dialogue with 3 or 4 close realtor friends over there. And I know that when I'm talking to them, I'm going to get the feet on the ground perspective. They're going to tell me exactly what's going on. Not necessarily, I don't know. Toronto Real Estate Board just came out with their reports. They're now no longer doing their mid-month report stats. They're now not doing a year-over-year basis comparison, which they have always historically done, year-over-year basis. Now they've switched to month-over-month. The timing could not be worse. It does raise some red flags, so that's why I always like to go directly to the source, people that I know and I can trust. The prices in Toronto as of October now, from peak to trough right now, are down 9%. I believe that's an average sales price. So sort of take that with a grain of salt. But what I'm told is basically, listings are continuing to increase. New listings are, I think they're up 20%, something like that, year over year. Sales are dropping. New listings up, sales are dropping. In the condo market, something like 17,000 units are expected to complete in the next couple months. You have an OSFI stress test now coming on in January. That's a market that I'm worried for. People were obviously, and I was wanting to say this, I was like, Toronto could experience a potential rebound similar to Vancouver, where you had a sort of a drop-off, reaction to the tax, and then back up. But the thing what happened in Vancouver that hasn't happened in Toronto, I continue to say this, and I'm continuing to watch for it, is there's no increase in there's no drop in new listings. In Vancouver, for example, the detached market, people want to know, well, why did it sort of rebound in the spring of 2017? In January and February of 2017, new listings for detached homes got cut in half. They dropped by 50%. To all-time lows, and so there was all of a sudden there was no listings coming on the market, and so it basically reignited prices, because it was the buyers that were out there buying had they had to compete basically with the very, like, there's no inventory coming on. But in Toronto, the inventory is actually increasing as opposed to decreasing. So it's a very stark difference in Vancouver. So that's something to watch for if you're in the Toronto market. Yeah, I would just say just watch for that. And that's really all I got right now. I think, you know, if you have any questions, a couple things to watch for, as I've talked about, and there's always this misconception, right? Like in Vancouver, so everyone's saying like, oh, but it's like Vancouver, global city, everybody wants to be here, land shortage, population growth. At the end of the day, whether it's Vancouver, Toronto, New York, or Ohio, for that matter, real estate is a financial market. It functions the exact same as any other financial market. Vancouver is no different. You know, you can throw in like money laundering in there, or whatever. Like at the end of the day, it's still a financial market and it still functions the same. Credit flows, you know, credit flows where there's returns. And so, you know, as these prices continue to go up, like in Vancouver, for example, banks are more comfortable to loan. Now you're starting to see them rein things in now. But, you know, like mortgage growth in September, and this has been happening over the last couple of years, has been growing 6% year over year. Mortgage growth continues to rise on a year over year basis. And so that's, you know, people ask like, you know, why is that money coming in? Like, why are prices going up? It basically all stems down into credit flows. That's pretty much the gist of it, what you need to understand. Now, obviously, there's certain factors that can drive prices up higher, like, you know, certainly foreign money is driving prices higher than they normally would be. Certainly, land constraints are driving prices higher than they should be. But it ultimately still functions as any other financial market. It is directly tied to credit. I think I'm going to do a video on that in another video, because it's too much to explain in one video, where basically I'm going to quickly touch on this and then I'm going to leave it for another video. But basically people don't, and this is why, like, whether you're on the news and the media, like nobody ever asks me, like nobody ever goes in depth on this, because the fact of the matter is, like, the money, how it's made, how it's created, how it flows, credit cycles, etc., is too complicated for the average person. Like the media is, like the people that report the news, like they don't understand how money flows. 70, there's polls out there that 75% or 85% of politicians don't actually understand how money is created. So the same people that are running your economy don't actually know how the money is created. I'm going to do a video on this another time, because again, it's just way too complicated. I'll basically try to dumb it down for you, but basically, I'm going to leave this for you, and I'm going to end it. Money is created by new bank loans. So, like, the actual $20 bill that's in your wallet, that is like that's currency. That only actually makes up 3% of the actual money supply. So when a bank gives you a new mortgage loan, they're literally creating money. They're creating new money into the economy. When they give you a loan, that's how money is created. So that's how 97%, give or take, is created. Yeah, basically out of thin air. Anyways, I'll do a video on that another time, but that's all I got for the Vancouver, Toronto markets. If you have any comments, feedback, what you're seeing in the market, put that in the comments below. All right, take care.